Welcome back to Summit Metals. In Precious Metals 101, you learned about coins, bars, rounds, and spot price. Today, we're tackling the big why and how questions. Why spot moves, what the gold-silver ratio really means, and how premiums form. In addition, we'll discuss about how to store your metal safely. By the end of this session, you'll be able to talk bullion with confidence, minus the Wall Street jargon. Let's start with the single number everyone checks, spot price. What is spot price? Spot is today's wholesale price for unfabricated metals. It's set on the futures exchange, the biggest being COMEX, founded in 1933 in New York City. COMEX lets big players such as banks, refiners, and hedge funds buy and sell contracts instead of the physical metal. One gold contract is approximately 100 troy ounces, while one silver contract is 5,000 troy ounces. If traders expect higher prices, they buy. If not, they sell. This pushes spot up or down minute by the minute. Now, there are three forces that move spot price. First, futures trading. Buying equals up, while selling equals down. Second, physical flow. The mine's output, recycling, central bank sales affecting supply, jewelry and electronics, driving demand. 3. US dollar strength. Weak dollars means foreign buyers jump in. An example, in early 2022, the dollar dropped 4%. Gold rose from 1790 to 1970, even though mine output barely changed. Let's do some quick math. If the spot price of gold is equal to $2,000, then a 100-ounce COMEX contract is equal to $200,000. That's $2,000 times 100 ounces. Most home investors do not trade in contracts, and that is completely fine. Now let's compare gold and silver directly. Now you may have heard the gold-silver ratio, GSR. GSR is the gold spot divided by silver spot. If gold is $2,000 and silver is $25, the GSR is 80. The practical use of using a GSR is a simple swap example. You own 80 silver eagles, they're approximately 1 ounce each. The spot price of gold is $2,000. The silver coin is approximately $25. With the GSR ratio being 80, you trade 80 eagles for 1 gold eagle. 6 months later, say silver goes up to $27 and gold goes up to $24.30. The GSR is now 90. You can swap back your 1 gold eagle for 90 silver eagles. Your stack now goes from 80 to 90 coins. That's how GSR works. Remember, GSR shows relative value. It does not mean both metals move together. Now, why do you pay more than spot? Premium equals spot plus 4 additional layers. First, fabrication. The machines, the labor, and the anti-counterfeit technology required to create that bar or coin that is so beautiful to be held in your hands. 2. The wholesale distribution, which typically starts at the government mint. The mint is required to have storage of the metals, the trucks to deliver it to the dealer, and the marketing of the coins. 3. The retail margin, the dealer's overhead, which is required to store and distribute the coins to you. And 4. The supply tension. Scarce products equals bigger premiums. Now, on the next topic, storage matters once you own the metals. Storage has 3 main choices. The first choice is a home safe. A home safe is very important to have when you have a lower amount of precious metals at home. Typically, you should be budgeting between $700 and $1,500 for something to hold under $20,000 worth of precious metals. B. A bank safe deposit, typically going between $25 to $200 yearly. This is not FDIC insured, and you need to provide private coverage for your precious metals. one of the cons with this approach is that you do not have access to your precious metals during the weekends or when the bank is closed. And finally, option C, one of the most popular options, which is private vaulting. You hand over your gold and silver bars to a third party which fully insures it, such as Summit Metals. It typically costs between $200 per $100,000 value per year. What you need to consider when making a decision is the need for access speed, the cost, and the risk of being robbed. Many people will actually combine the storage methods and have a hybrid approach, where they keep a certain amount, under $50,000 at home, and anything more in a private storage vault because it's fully insured and easy to access. And here's a bonus tip. Make sure you photograph your coins, list the serial numbers, and store a digital copy off-site. Insurers will need this for proof. Now, eventually you may sell. Let's plan your exit. Your goal is to have $40,000 down payment on a home. So now you need to decide on where to sell your gold and silver. You have multiple options. The first option is selling to a local dealer. You get fast cash. Or you go and sell back to an online dealer, such as ourselves, which actually provides you the highest payout. Now, we also recommend that you do sell your gold and silver over time when you meet certain thresholds. Sometimes you should go by the rule of thirds. 1/3 of it should be used towards accomplishing certain goals in life, such as purchasing your first home or needing to purchase a car to get to work. Another third if the price jumps more than 10% from your original purchase value. And the other third should be kept as a hedge towards your overall investment. Now, this is not financial advice. These are just strategies. All right, let's wrap up. You now understand the spot price mechanisms, COMEX's role, the gold-silver ratio, the premium layers, and storage options. Have questions or comments? Leave them down below. Like and subscribe. And ready to buy or sell? Visit us at summitmetals.com. Thanks for watching, and happy stacking!